Hello, this is a continuation of the overview of the preparation of the Form 706. Where we left off is getting back to the midterm, where you must prepare an estate and gift tax return, Form 706. It's going to be important that you understand how it needs to be prepared. You're going to prepare it as complete as possible, given the information that has been provided. Once we get past these first 4 pages of Form 706, and we've touched upon them very briefly in the last video, we get to the schedules. So if we go to Schedule A, and give me a moment to get to that schedule again. That's our starting point with the schedules. And Schedules A through D and F are all about specific kinds of property. Real estate, for example, is reported on this Schedule A. Schedule B, for example, is going to include securities for the most part. Let's trying to get to Schedule B. Oh, here we are. So stocks and bonds are reported on Schedule B. So we have 5 of these schedules initially, the Schedules A through D and F, and of course there's more schedules, aimed at specific kinds of properties. What is included in those schedules, for the most part, are assets included in the gross estate under Section 2033, which we have referred to as probate property, using shorthand, if you recall, in my prior lectures. Schedule E through J, Schedule E and Schedules J through I are used for assets reported under a specific code section. So, for instance, let's go to Schedule E real quick, and you can move to that schedule and take a look at it while I'm trying to get to the page. Whoops. Just one moment. All right, so if we look at Schedule E, what you'll see is they have a code section listed here, as do a lot of the other schedules that are listed. So when you go to these schedules, it's going to basically identify the various types of codes that relate to the assets that are going to be put on these specific schedules. Just to be sure that when you go through the schedules, again, if there are questions in the schedules, make sure that they're all answered. Finally, if you're looking at assets pulled back into the estate under the pullback rules, such as an irrevocable living trust on the date of death, the trust then is reported on Schedule G, as you see here. However, if you have an irrevocable living trust that doesn't get pulled back into the gross estate under the pullback provisions, then you report those assets the same as probate property. So if you have real estate, you show the property on Schedule A and not on Schedule G. Another example is on Schedule E. We'll go back to Schedule E. You use that for jointly owned property, described basically under Section 2040. And it's also used, for example, for property held in joint tenancy. So you're going to report property held in joint tenancy on Schedule E and not on Schedule A, and I want that to be clear. The schedules detail, again, the applicable code sections that relate to the assets shown. When we're talking about mortgages, you have to draw a line between recourse and non-recourse debt. Recourse debt is reported on Schedule K, and that's back a little bit further. Non-recourse debt is reported with the asset on the schedule for that asset. So, for example, if there's non-recourse debt related to an asset belonging on, say, Schedule A, let's go back to Schedule A. Then that debt, in this section here, when you include whatever that asset is on Schedule A, the debt is reported with the asset on that same schedule. If the debt has increased, keep this in mind, in value, the creditor is limited to the value of the asset. In this case, the debt is reported on the same schedule as the asset. But the asset is reported as zero when the debt is in excess of the value of the asset. Next, we'll go to Schedule M. And I'm just trying to get you to get a feel for these schedules. And this is where you report the marital deduction. This form has questions also that need to be addressed. You're going to have two parts to the schedule, A and B. Part A deals with the Q-tip property. And Part B, and let's go back to the Q-tip property. With respect to it, you make the Q-tip election by listing the assets in Part A. In our case, where the election is made on the entire qualified trust amount that is a function of a formula, then it's enough that you put the formula in here describing the dollar that passes to the trust, excuse me, with an indication that the property equal to at least the fair market value will be used to fund the gift. So you don't necessarily have to have the actual funded amount listed, because when a return is filed, you don't always know the assets that will be used to fund the gift. Next, we'll go to Schedule O, and Schedule O is where you report your charitable deduction. And then behind that is Schedule P, and Schedule P is used to compute the credit for foreign death tax. So that's it for our overview, and good luck with the preparation of Form 706.